What if everything you've been told about investing stops working in the next 10 years? Because the world that created that wealth doesn't exist anymore. And the investors who don't adapt, they won't just miss gains, they'll lose wealth.
The world is changing faster than ever, and that means the old investment playbook, well, it's pretty much obsolete. Today, we're going to build the new one. This is a resilient strategy that's designed to not just protect your wealth, but to actually grow it in a big way over the next decade. So if you want to future-proof your portfolio, you're in the right place. To really understand where we're going, we have to start with where we've been. And man, the last 25 years, they've been nothing short of phenomenal for investors. Just look at this. The Indian stock market saw a 25-fold increase. I mean, a simple buy and hold strategy created some absolutely staggering wealth. And that phenomenal run leads to the single most important question you should be asking yourself as an investor today. Can you really, honestly expect the next 25 years to look anything like the last 25? Can you just keep doing what worked before and hope for the best? Well, the answer is almost certainly no. And that's because the fundamental global order, the very foundation that powered this incredible period of growth, it's undergoing a massive tectonic shift. The rules of the game are literally being rewritten as we speak. So let's get right into it. This is the first and honestly the most critical concept you need to grasp if you want to build a truly future-proof portfolio. You have to understand the new world that you're investing in. For the last 70 years or so, the entire world economy has operated under this thing called Pax Americana. What that basically means is that the US acted as the world's peacekeeper. They protected the shipping lanes, and they created a stable environment where global trade could just flourish. That stability, that was the bedrock of predictable growth for decades. But that era, it's ending. We are moving from what's called a unipolar world, dominated by one superpower, to a much more complex and frankly unpredictable multipolar world. In this new era, you're going to have multiple centers of power, the US, a China-Russia bloc, and others, all competing for influence. And what does that mean for us? More friction, more uncertainty, and a whole new set of risks for investors. So how on earth do you invest in this new world? Before you even think about buying a single stock or picking a sector, you need a foundational playbook, a set of timeless principles that ground your decisions in logic, not in emotion. Okay, rule number 1 is an obsessive focus on quality. You need to get really good at avoiding businesses with clear red flags. The ones that expand way too quickly into totally unrelated areas, what the legendary Peter Lynch called diversification. Instead, you want to actively hunt for companies with these green flags, a laser-focused business model, the ability to fund their own growth with strong cash flow, and founders who are trying to build a multi-generational legacy, not just looking for a quick payday. And the second rule, it's all about mastering your own psychology. The single biggest mistake investors make is something called recency bias. That's just piling into whatever stock or fund has performed best recently. The disciplined approach is the exact opposite. It's focusing on the incredible, mind-bending power of longevity and compounding, and understanding that real wealth is built by staying the course, especially when things get choppy. And hey, don't just take my word for it. As investment veteran Vijay Mandry puts it, this habit of chasing yesterday's winners is probably the single biggest destroyer of wealth out there. I mean, the data shows that an investor's actual returns are often way lower than a fund's returns, and it's simply because they buy high in a frenzy and sell low in a panic. Now, here's where it gets really interesting. How can you structure your portfolio to not just survive, but actually thrive in this new, uncertain world? Well, there's a really powerful framework for this, and it's called the Barbell Strategy. Just picture a weightlifter's barbell, All the weight is loaded onto the two extremes, with absolutely nothing in the middle. The Barbell Strategy applies this exact same logic to your portfolio. You invest only in assets that are either extremely high growth or extremely safe. This forces you to be clear about your goals and avoids getting stuck with a bunch of assets that don't do either job particularly well. So what does this actually look like? Well, on one end of your barbell, you have your high growth engines. Think cutting-edge US technology and AI stocks. Then, on the other end, you have your fortress of safety, assets like physical gold or inflation-protected bonds. The key, the absolute key, is to consciously avoid that muddled middle. Those assets that don't offer huge growth, but also don't give you real protection. So, with that framework in mind, let's zoom in on the growth side of your barbell. What are the powerful, long-term themes that are going to define this new multipolar era? Three massive secular trends really stand out as the key growth engines for the coming decade. They are technology, especially the race for AI dominance, defense, as nations rearm for a more dangerous world, and energy, the critical fuel for this entire new age. First up, technology. The race for AI supremacy isn't just a business competition anymore. This is a matter of national security and economic power. As analyst Akshat Srivastava notes, this tech sovereignty race is creating enormous investment opportunities that, believe it or not, are accessible to everyday investors like you and me. Second, defense. In a world that's more fragmented and confrontational, defense spending is structurally on the rise. And when it comes to investing, U.S. defense companies hold a huge strategic advantage. Why? Well, because the U.S. can use its geopolitical leverage to push sales to its allies, a position that firms from other countries just don't have. And third, energy. Now, we're not just talking about oil prices here. The AI revolution is creating an almost insatiable demand for electricity to power these massive data centers. This makes innovative energy companies, from nuclear power to next-gen grid technology, an absolutely critical part of the future's infrastructure. Okay, let's move on to a really crucial filter that's going to help you pick higher quality companies within any of these themes. This is all about understanding the difference between a commodity business and a branded business. This distinction right here is your quality filter. A commodity business is a price taker. They sell something generic, like steel, and they are completely at the market's mercy. This means their profits are going to be super volatile. A branded business, on the other hand, is a price maker. They create desire, they command premium pricing, and they enjoy stable, defensible profits. One is about surviving market cycles, the other is about building a lasting legacy. And this MRF Tires example just illustrates the concept brilliantly. Think about it. MRF took a simple commodity, rubber, and they built a brand so powerful, especially in the replacement market, that people literally walk into a store and ask for it by name. This lets them charge more and escape the brutal cycles of the rubber market. That's the kind of business you want to own for the long haul. Okay, let's put all the pieces together. Here is a clear, actionable plan for building your very own future-proof portfolio, based on everything we've just covered. This checklist right here is your action plan. First, just accept the new reality of a multipolar world. Second, ground your decisions in a disciplined playbook, not in market hype. Third, build resilience by structuring your portfolio with the Barbell Strategy. Fourth, put your growth money to work in the key themes of this decade: tech, defense, and energy. And finally, use that brand over commodity test as your ultimate quality filter. This multi-layered strategy is what will allow you to invest in the future with real conviction. And that's the question I'll leave you with. In a world that is defined by constant change, hope is not a strategy. A clear, well-thought-out plan is. Thanks so much for joining me.
If you want to build a portfolio that actually survives the next decade, hit subscribe, because this is just the beginning.